Welcome back to Ensuring Success 2023, or welcome if you're just joining us for the first time for this session. This is Ensuring Success. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and we are live in Dallas, Texas at AMS Pictures. And in order to present this two-day event, we owe everything to our sponsors who make this possible. So I'd like to read off their names really quickly before we get started. And they are ADP, Avalara, BotKeeper, Canopy, Instead by Corvi, CPA.com, eFile for Biz, Relay, WriteWorks, SafeSend, Suralink, Walters Kluwer, Xero, and Zoho. And this particular session is sponsored by Canopy, and we're so happy to have them with us. So, just a couple housekeeping things. We offer CPE credit, obviously, and for this session also we offer IRS CE credit. In order to claim your credit, you need to obviously attend for the whole session. And in order for us to verify that you're here for the whole session, we will present 3 codes on the bottom of your screen at 3 arbitrary times during the session. And it'll be your responsibility to write down the number and to make sure you're paying attention and getting that number. You'll hear this sound. Right, and that's your evidence, your reminder that it's time to write down that code if you're planning on claiming CPE or CE credit for this session. And then when we're done, you'll go to the CPE/CE option on the top of our menu, and you can enter the codes for every session you've attended for the whole event and download your CPE certificates on the spot, and we will be submitting CE information to the IRS on your behalf. I think that's all the housekeeping. I want to introduce our panel then. We're ready to talk about tax resolution, and I'd like to introduce Nicole Davis and Tanya Bieber and Vaughan Long and my co-moderator, Alexander DeFelice. If you'd each like to give a brief introduction, that would be great.
Yes. I'm Nicole Davis, and I am the owner of Butler Davis Tax and Accounting and BD Payroll, and we're based outside of Atlanta, Georgia.
I'm Tanya Bieber, and I am the founder of Tax Edge. Have 2 offices in Colorado and now 1 in San Antonio, Texas.
My name is Vaughan Long, and I am the owner of Tax Solutions Alliance, based out of Richmond, Virginia, specializing in resolution.
And I am Alexander DeFelice, Director of Marketing and Business Development for Payne & Fears Law Firm in Southern California. Co-moderating with Gail, taking questions. I know there's always a lot of questions about this type of topic, so under the video you will see a question box. Please feel free, and we'll share those with the panelists. And I am also your designated bell ringer for CPE.
She is.
All right. So when you need to know how to assist your clients with tax issues, it may be overwhelming, especially if you don't do that as a full-time part of your practice. So we have here people who do this all the time and know a lot about tax resolution, and we have a lot of topics to cover. So we're going to dig right in and start talking initially about helping your clients set up installment agreements. So where should we start with that if your client owes money and can't pay?
I have no problem jumping into that one. It is something that maybe a lot of practitioners, you don't realize you're doing something in the way of tax resolution, is you have a tax return you prepare, and maybe that surprise, how did I end up owing this much? What am I going to do? Can you help me? They're coming to you that what you're doing is a form of resolution, and most often the approach is relatively easy because there's so many other things you need to know, but a form of a payment arrangement called an installment agreement is the go-to, where you're kind of starting to dabble your toe into and start to get into the world of resolution.
So my question, Tanya, would be, if a tax firm is running across these types of situations where clients cannot pay, would the installment agreement be considered a separately billed service, or is it something they should include as part of their tax work?
That's a good question, because I think that I think generally us as tax professionals, we have really big hearts and we want to help our clients. So we think, oh yes, bring me the letter, I'll do that for you. But it is that we have to provide good communication and say, when we're doing tax prep, we are preparing the tax return. Everything that happens after is a separate service. So if you get a letter or you can't pay or you have other things going on, that we just need to clearly communicate with them so that that it should be a separate fee, in all honesty.
Yes, good to know.
I love the fact you went to fees, right? Because that speaks right to the heart of every representative and tax
Yes.
preparer who wants to add to their practice, right? And some things on fees, number one, absolutely should be separate.
Right.
But you need to get these fees up front, because once you start helping some of your clients with doing these kind of deals, they're going to remember you. They're going to start referring people to you, and all of a sudden, these are clients that you haven't had before but have a tax problem. Get your money up front. These people do not have an issue not paying the IRS. They are not going to worry about not paying you. So you got to get paid up front when you do the work to protect yourself, because aren't we all here to look out for everybody in the audience and ourselves at some
Exactly.
level? So great question.
Thanks.
Definitely.
I also want to say that, so I dabbled in tax resolution when I started my firm. We're primarily cash, payroll, and tax preparation. But this year, we really started to get into more of the tax resolution work. And what I found was that I don't know what I don't know, right? As a person that has never really worked under anyone that did a bunch of tax resolution work. So how does someone like start dipping their toe in the tax resolution pool?
Well, I like the transition back to the fee part, right? Because if you start doing it for your own clients, mention to them. Almost everybody out there knows somebody who has a tax problem. So if you solve that problem for them and said, hey, I'd love to do more of this. If you have a friend, if you know somebody, lots of family members have tax issues. So if you start sharing that out, they're going to start referring you work. And one client turns into two. I don't know, Tanya, when you started your practice, that first year I had one client in 6 months. Now we do so many per year, I can't even off the top of my head tell you, right? But it takes time, but it almost incrementally grows every year. Did you find that when you built your practice
It's
as well?
definitely the case, and it's to not be shy and not be afraid to ask, well, do you know of anybody else with a similar problem? And with each one of those cases, it may be that it's intimidating that very first time around. It's not bad to have somebody to mentor with and somebody to work with. They can say, oh, well, if you're not sure in this particular area, let's talk about that. That's one of the best ways to kind of get into it and feel more comfortable, but just to be brave, because you're going to always encounter cases that are not like other cases you've done. I think even to this day, I encounter weird situations. I'm like, oh, I've never seen that before, but let's place forward and see what we can do about it.
One other thing, if you're going to take on representation work, so I learned from a former IRS revenue officer. So I think most people are comfortable with revenue agents or an IRS agent. Revenue agents do audits. Revenue officers collect missing returns and money that you owe. And so I learned from a former IRS revenue officer. One of the things he beat me into my mind from is, if you're going to take on representation and do work, you need to confirm they're current. Because the baseline of doing any agreement is, are you current filing? And are you current paying, including your estimates? You can always deal with the past issues with an installment agreement, but you got to be current. And if you're not, I think a lot of representatives who get into this struggle. They're like, why won't the IRS take my deal? Well, they're probably not current is the first place I would start when people have come to me and I said, hey, why didn't this work? Current, and make sure. And if they're not, now you've got non-filer, and you can do past due returns and charge good fees for that. Maybe they have substitute for returns, SFRs, that need to be fixed. All of this turns into additional work as well and can lead to a bigger fee for the representative.
And it's funny you're mentioning the substitute for returns, as that can be one of those random things where you have your client come in and say, they just sent me this bill and I know I've never ever filed this particular year. Why are they doing this? And to help them through, there's definitely strategy. Do we do a replacement return for that? And that's where they take information, don't give you any deductions, of course, and create a bill and start collecting on it. So there can be a lot of avenues into it, and it's certainly existing clientele, but then they do tell their friends and neighbors and family, and pretty soon that can start growing from that one little instance of helping.
So thinking about a small firm like me that is just starting out, do you recommend that we niche in a particular type of resolution case, like an installment agreements or FSRs?
It's hard to say.
I bet we're both wondering how to. So, brand new person, right?
Yeah.
I would say learn full pay installment agreements, the 6-year rule, right? And the challenge you have right now is so many staff at the IRS are brand new. That's ACS, Automated Collection Systems. That's the people you talk to on the phone,
Yes.
the practitioner hotline, right? Or revenue officers in the field. They're all very new. So many retired during COVID. It was not unusual to have someone who had been working there 20 plus years. Now the max person I work with in our Virginia area is 4 years. So, and they're getting ready to move that person into a whole nother department because they need to promote them into somewhere else. So you're, for the next, I was thinking 5 or 10 years, you're gonna have constantly brand new people with ACS and ROs who don't really know. So you're actually negotiating through the manager, which makes all this more difficult. So come back to your question, full pay installment agreements should be fairly straightforward, right? We were talking about doing some first-time penalty abatement, should be really living in that. Release of passports, because you need an installment agreement, it's probably a full pay agreement to do that. Getting transcripts, analyzing the 10-year collection statute, and letting them know how much time they have left to do. If those 4 areas you lived in at the beginning, that's good, brand new revenue that is not going to get into the higher echelon of challenges, because we have war stories that would blow you away. And we have very different practices, West Coast versus East Coast, but it's the same thing. So live in those areas, full pay, passport, penalty, first-time penalty abatement, and there was something else.
I'm glad you mentioned first-time penalty abatement because
Wait, you can tell us about it after we take a break.
okay.
Love it. She's getting right on.
One quick break to hear a message from our sponsor, Canopy, and we'll be right back with your first CPE code for this session.
Ah, the sacred spreadsheet. It holds mysteries untold if you can just unlock them, decipher them, or as we like to say at Canopy, unclunk them. Our goal at Canopy is to help you unclunk your practice. And an essential part of that is unclunking your data, helping make it more accessible and easier to understand and act upon. That's what Canopy Insights is all about. Well, we call it Canopy Insights, but what it really is your practice's insights. With simple and clear visualizations, drill downs, and easy-to-use features, you'll see how your practice is working or not working. You'll spend less time analyzing data and more time putting it to good use. And because it's all live data, you'll be getting the information you want all the time in real time. With custom formulas, scheduled reports, customized alerts, and many other useful features in Canopy Insights, you can make more informed, difference-making business decisions. Your aha moment is just a click away. Unclunk your data. Unclunk your practice with Canopy Insights.
Welcome back. And if you look at the bottom of your screen, you'll see the first CPE code that you need to record for this session. That's your reminder to keep a record of this if you're planning on claiming either CPE or CE credit for this session. Okay, back to you, Nicole.
All right, so I was mentioning about first-time penalty abatement. So before, FTAs was light work. You literally could call, get a penalty abatement over the phone. I think the largest one I did was maybe a few years ago for like $28,000. I called 3 weeks ago
Never
to
get that
get a
mail.
first-time penalty abatement, and the rep said, I can't help you. I'm like, what? So what changed?
They are always, just like tax law, they're always modifying the rules. And unfortunately, that was one of the areas that did change. And I wished I could say it was as wonderful and easy and phone call, and it really has gravitated towards something entirely different. You have to write it out, you have to request it, it has to be mailed in. But I think it really goes down to kind of along the lines of the last question, we have to have the superior knowledge because there's so many agents, there's so many of the staff members we're dealing with that are so new that we may have the superior knowledge. And that's when you get into it, is feel comfortable and don't be afraid to say, you know, that doesn't quite sound right. I'm pretty sure in the manual it says I can do this. And you might get the, oh, well, let me check on that. Let me put you on hold. And it's that particular agent maybe just doesn't know the answer. And unfortunately, yes, they changed the rules, but don't be afraid to push when you know that you have the right answer and the right rules. So.
All right, so we have a question from the audience that I know is a little bit controversial, and I'm going to start with Tanya because she's uncomfortable. I'd like to refer tax resolution out to an expert or specialty on a fee splitting and retaining the client basis. Is this possible, and is this something that you can talk about?
Yeah, it is definitely possible. It is something I can talk about, and it is with, I think, so many things in our practice, you're going to find a wide variety of competency and comfort level. Do they, reach out and help other accountants? I think probably with Vaughan as well, we have an aspect of our businesses where we do help our attendees and accountants that we come across, and that we give a portion of those fees as a splitting arrangement. That I think that can be something that's common, but you want to look and see that, is this somebody I'm comfortable working with? Do they have the knowledge and the expertise? And if that's a good arrangement for you as well.
I think referring work out is as much a reflection of yourself. And if that person, look, there's plenty of people out there, I think, who say they do resolution, and you get into the work and you go, they don't really understand what they're doing.
Yeah.
And there's multiple different levels of difficulty for case types. So that's the challenge is, if you're going to refer it out, can they handle it? So I'll be honest, most people are happy to refer a client out, and they don't ask. They could. I'd be happy to give them some kind of commission on it, but they don't ask. It's like, I want nothing to do with this, and I'm afraid of messing this up. And so, but I think there's a middle ground. But please be careful. There's people out saying, oh, I'll give you a commission based on referring it, and they can't handle that level of work. It blows up in your face, and you regret it the whole time. And I think so. It should be more about the ability of the representative
Absolutely.
who you're working with, less than the commission, because that client's going to take it out on you as the referral source, and you lose the client if you're not careful.
Yes, because the client
So-
trusts you, and if you're referring to someone they don't like or messes up, they don't look at you.
I mean, and that could be
Yeah.
for any of the multiple sessions that we
so
discussed
true.
this last
Yeah.
2 days, right? We're going to outsource the sales tax. We're going to outsource R&D. We're going to outsource crypto. Like you can't just throw it out there. You got to like really make sure that they're going to treat your clients the way you would treat them, right? Not the way, because that might be two different things. Are you a rapid response type of person? Are you a walk the client through it? How do you bill them? That's another thing. If you're going to refer it out, do you bill it?
That's a good question.
Oh, yeah. I'm taking the money, and I'll pay you.
Yes.
Look, tax problem people don't like paying anyways. So I'm certainly not going to roll the dice on credit with someone who's referring me work. Like, no, referring to me. Happy to have this agreement to pay you once I have the money. But look, the guy taught me, and I've done this. It's the vast majority of our clients pay up front. If we do anything with installments, you have to be full paid before we submit the financial agreement and statement to the revenue officer, to ACS. I'm just not playing that game. But by doing that, we can take on some clients along the way that are like, oh, they're super nice people. They didn't know what they were doing. They don't have the money to pay us. So we'll take a few clients on the way, like pro bono-ish. I have one little old lady still paying me $25 a month for her, and I don't even have to follow up. I'm like, whatever she has is fine. But if you're doing it that way and get paid up front, you can help some people you want to help too. So,
You
yeah,
get to be in
that's
the driver's seat and make that decision as to who you want to help in
yeah,
that case, though.
money first before you get
Yes.
into rep work.
So another question came in, I'm going to have to toss this at Nicole, is should you do tax resolution outside of tax season?
We do tax resolution all year round. Because we're not a heavy tax firm, we primarily only do it for our clients. And if we get a referral from someone, we have to know that person well in order to take on a client like that. But we do it year round, not just during outside or in tax season.
So
And
what if you
interesting,
were a
too.
heavy tax firm? What would you guys recommend?
And the interesting thing is, what I was going to say is, when do you get the most tax resolution clients? Is
During tax season.
During tax season.
That's that moment when it's the forefront of their mind. That's the moment you have contact with them. That's often when the most cases and work come in anyway. So it's not really seasonally based in the same way that tax season works. So
And before we
It's
go
the
to
nature of it.
installment agreements, I had a question. How many times can someone have an installment agreement if they are delinquent every year?
Are we just talking amongst friends with the IRS out here, right? I don't know what I do know what the IRM says, Internal Revenue Manual. I've got a few clients that no way I should have 6 different installment agreements on. So there really is not a limit, and those are revenue officer cases. So I think there's probably a misunderstanding that, it's not like 3 strikes and you're out. It is, I think the IRS realizes from a resource standpoint that, do we just go through this and keep putting them in new installment agreements? But I think the bigger topic is do they have assets? You're dealing with a 10-year collection statute. So I wish this message could get out to everybody out there who's working some early rep work. It's actually pretty easy to get a payment agreement when there's 7, 8, 9 years left in the 10-year collection statute. When there's 2 or 3 years left, guess who's coming back to seize assets and property and real estate? See, I can get a payment agreement even if they have all this equity in their real estate and not have to give it up. But 2, 3 years, left in the statute, which is 5 years or so after I got the agreement, you have more equity likely in that real estate. If it's a partial pay installment agreement, which is not a full pay, right? Then you've added interest and penalty on top of all your taxes. They are coming to take your real estate. And you've really got to analyze the assets and not just go, oh, this was an easy payment agreement. I'll just keep doing this work my whole life. I mean, IRS just rolled over for me. It was probably because it was early in the 10-year statute. I don't know. I mean, if you ever wondered that. But.
And you need to set up your clients for success. So it's not just a matter of, oh, I can do this very easy. But if we're setting them up in a manner that they're continually defaulting on the payment arrangement, we need to rethink how we're doing that. How do we set them up in the best manner possible for success? And not being afraid to use creativity. If I have one that was very seasonal, I knew if I set them up, they're going to fail just a few months out because they had a seasonal business. Is there a different way I could approach that so that we keep them in compliance? And that could be a secondary aspect of additional revenue, is monitoring and helping them and keeping them with, okay, are you filing on time and paying on time? As simple as things can cause you to default. So it is not so much a time frame like, oh, 3 strikes and you're out. I like the way you put that. But maybe looking at it from the client standpoint, can we ensure that we're doing that to give them success?
Okay.
I love what you said about reoccurring revenue. So let's say you charge them to do an installment agreement, right? There is an opportunity to charge them whatever fee you think is fair and you can work out with a monthly review, checking transcripts monthly, staying in touch. Are there things, hey, are you making sure you're making your estimates? Because that is one element of staying on the installment agreement. You want to, look, it's expensive to pay for these agreements. You want these agreements to last as long as possible. So let me help you with that by charging you monthly to oversee this and make sure you're making your estimates, which every tax practitioner wants their clients to pay estimates. So now you have an opportunity and you can partner with a tax firm. I know I get referrals from other tax firms, and I always say, look, these are your clients. I am not, and this is a big thing if you're going to get into rep. I make it clear I'm not here to take your client. I am here to help get them out of a difficult situation, give them back to you in a better place, and be a partner with them, because you take one client from a referral source and they never refer again. So you really got to be careful, and the former RO taught me that from day one. And he was so true, so right about that.
I just wrote that down. M&M service, monitoring and maintenance. I'm adding that.
There
to
we
my
go.
service
I
line.
like that.
I like how
was
that
good.
sounds, right? But there is such opportunity there, and the clients, they sometimes just don't pay attention. So are there different ways? One of the better ways for an installment agreement success, direct debit, because they will forget to make a payment
so true.
inevitably, and then it bombs your whole entire plan.
work
So
you did, it's gone.
a lot of it, I think, client perspective. How do we just do that in the best manner possible for them? But monitoring, good for them too.
Early on in the direct debit, everybody was like, I'm not doing direct debit with the IRS because they get my bank account information. Like, they do not have this already,
Right.
right?
On the 1099 interest forms.
So, and there's so much chance, because using direct pay a few years ago wasn't as strong with the IRS as it is now. So now you can make installment agreements on direct pay, and I feel more comfortable with that. But you do all this work, you spend all this money doing the rep work, and then they miss one payment. Because this is a big key, you file a tax return by the deadline and you're good. If you make the payment on the deadline date, you lose your payment agreement. They have to process that payment and receive it before the deadline. It's very different from tax returns. So we would tell clients, you need to pay 10 days to 2 weeks because we were mailing
due
checks.
date.
Yeah.
Now direct pay, 24, 48 hours is probably okay, but you don't want to wait to that last minute. If there's any hiccup, you lose your payment agreement, you lose all the money you spent on us getting that to you, you start all over again. What a mess. So when they make the payment is critical.
All right, did we want to move on then to non-filers?
You talked about building a new representation practice. I think we talked about installment agreements and transcripts and so on. Non-filers, tell all your friends, hey, I like doing non-filing work, right? Non-filers, I haven't filed in 3 years, 6 years. You and I were talking before this. 15 years is my record.
20 is the max.
You win already, right? Now, do you
filed
do
in
all
20
those?
years.
So the question is, do you do all
We
those?
had to
But
backfile all those
Oh,
returns.
wait, I think before you answer that, we have a poll question, I
Oh, you
think,
bet.
asking that.
Perfect.
let's see.
Let's
Maybe, do we get it
see.
right?
Right?
Hold on
It's
for
number
us.
poll question number 4.
4. Okay, so for the audience.
No pressure.
The question is, a client comes to you with 8 years of unfiled, only 8 unfiled returns. How many returns should you prepare? 1 year, 3 years, 6 years, or it depends? I need more data
You and I are
to
laughing because
Yeah.
decide.
I would say it's multiple answers. to be fair. So let's say why, because we were chatting about this before the session. 6 years is where everybody starts, because it takes manager approval. This is kind of an unofficial rule. It's in the Internal Revenue Manual. 6 years is the line. They have to have permission to ask you for more than 6 on personal returns. I think we need to make a distinction with business and personal. But sometimes clients on non-filers can't pay for 6 years. Look, I'll start like, how many years can you pay for? Not like it's I'll only do 1 and hope they don't ask. So 3 years I will often start with.
When you say pay, you mean pay your fees
Pay
or
us
pay the
to do
IRS?
it.
Okay.
Like some people when they come in, they don't have like, I had the money per year if I'd done it correctly. But paying you to do 3 or 6 years is outside of their means. So again, we're back to deposits. Typically for non-filer cases, I require minimum 50%, if not 100%. Because you don't want to get stuck doing all the work and they never come back. I've seen that before.
Yep.
So I know the 6-year rule is there. I've used it before. Usually I'll start with 3. And my theory is if the IRS wants more years, they'll tell us in writing. And if they don't have the money to do 3, then 2, or just get them current and then build off of that would be my first place. And there's good money for your practices in this. I think the earlier question is outside of tax season. We try not to do non-filer work. I mean, look, you're already late. What do you care about 3 more months?
Right.
So let's do that in the off season, which leads into an installment agreement, which now leads into M&M's and monitoring, and
Yep.
you've got a nice revenue add.
Exactly. And it's that 6-year rule that you're referring to, I want to say, I think it's Revenue Procedure 133.13. There's a procedure that they say, well, we will accept 6 years and consider you to be compliant. But if we don't know that as practitioners and they come in and say, I haven't filed for 20 years, and we start filling out 20 years worth of tax returns, do we really want to create an assessment of taxes plus penalties and interest and everything going
So
back
true.
20
years and
years.
years
Yeah,
and
so
years?
good. That's
So
such a great
that's
point.
very important to know that, that is their rule and their guidance, but it is, again, what's in the best interest of the client. Maybe we can do 1 at a time and they can afford, maybe they want a full pay or maybe they don't owe that much, but taking care of our fees as we go and get them all compliant again. So
If you do
it's
1 at
great
a
area.
time, would you start with the most recent
Right.
and go back each year?
It depends on the circumstances. A lot of times we may be saying, well, look at this older year and you don't owe all that much because you didn't earn much income, but now in the current year you're owing more. So it can depend, it really is a client-by-client basis as to how we approach it.
I'd love to follow up on that. I know it's time for
Yes.
something else.
Yeah,
so
we're going to take
we'll
another
pick that
quick
up again.
break
Great.
to hear from our sponsor, Canopy, and then we'll be back with your second CPE code.
Canopy unlocks the firm you always wanted. First, by unclunking, yes, unclunking the firm you already have with our modern all-in-one solution. Client management, document management, workflow, time and billing, reporting, client portal, payments, mobile apps, all in one place. No more app hopping. Another way Canopy unlocks the firm you always wanted is by helping you make the most of your client relationships. One-stop shopping, so to speak, for all the client information you could want or need, all with industry-best security you and your clients can trust. Canopy unlocks the firm you always wanted with simple, efficient, secure, firm-wide document management. It gets you organized, helps you work and collaborate efficiently, and as long as you're looking for efficiency and collaboration, look no further than our client portal, a document storing, document sharing, e-signature collecting dream come true for accountants and their clients alike. Less clicking, more doing. Does that sound like the firm you always wanted? Focus your time and your team's time on the right things with templates, automation, and project management galore. Canopy multiplies your efforts, so your practice requires less proverbial midnight oil. The firm you always wanted also gets paid, right? That's why our end-to-end platform includes time and billing, because nobody goes into accounting to become a bill collector, do they? Have your cake and eat it too with our reporting and visualizations. Shorten the time it takes to have an aha moment. See where your firm is efficient and productive and where things can be improved, and then do something about it. Whatever size or type of firm you have, wherever you are now and wherever you're going, Canopy can unlock the firm you always wanted.
Welcome back. If you look at the bottom of your screen, you'll see the second CPE code for this session. That's your reminder that you want to write that code down if you're planning on collecting CPE and or CE credit for this session. Okay, we kind of continued the session while we were on a break, so we're going to
So good. So
repeat
good.
what we just said while we were talking to ourselves.
Yes, so I brought up the question about the refund statute. What if you have a non-filer who has 6 years of delinquent returns? The most recent 3 years they owe, but the last 3 years they're getting a refund.
You are, can I say SOL without saying it out loud?
Say it like that.
Say it like that. She was going to bang that bell again if I went anywhere else. So no, you lose your refunds.
So they
Even if
want
you
to
had
apply
a
it to previous.
Not only do you not
yes.
get the money back, if you had a refund for all 6 years, you wouldn't get years 4, 5, and 6. They won't even take the refunds from years 4, 5, and 6 and apply it
No.
to years 1, 2, and 3. You're just SOL.
By
everybody
statute, by
here.
law, they can't do that.
No, it's gone. So
you
that's
should
why I like
always
3
file on
years.
time.
To your point, that 3-year starting point, because I get all the refunds for those 3 years, if that's possible.
Right. Yes.
If I don't, IRS will tell you, but there's one caveat to 3 and 6 years we were talking about at the break, which is if the IRS sends a letter. Whatever that letter is, I'll start from there and work my way forward because you need to bring them current to get an installment agreement if that's the case. So if you get a letter on 2019, then we'll do 20, 21, and 22. And that's a weird number of 4 years, but that's why.
And it could be, too, that you can preemptively go to them and say, I would like to do a compliance check, in which they can tell you what years they want you to file based on the information they see in the third-party wage and income transcript data. They're like, oh, well, we would like you to file, let's say, 21 and maybe 19, 23, whatever those years are that they see. That can be a way you can go to them and actually find out which years must you file without just
Filing
filing them
all
all.
those returns.
So a couple different strategies.
And we were talking about that pre as well, and I'm like, no, I'm the one who doesn't call, and like, I'll just file these years and see what they say, and hold on
Couple
for
different
it.
techniques to
Yeah,
pick
right. Well, there is
which way you
still,
wanna
even
go.
with much as we do, there are different things
But
we
I don't know,
do.
you could do that though. Like you can actually.
You can say, you can
pick
ask
and
for a
choose.
compliance check where they will go through the records and say, okay, based on what we see, because they may see that there's reported income that's going to generate tax, we'd like you to file these years, and that gives you kind of the, okay, great, and then you know they're going to be in compliance. That's the reason why you ask for a compliance check, because then if we're going to do some other sort of resolution, okay, great, have you filed all the returns necessary? Yes. It doesn't mean all the returns, because
Got
I've had one
it.
that was like 20 years, but it was, I think a weird thing was like 2 and skip 1 and 2 other ones.
Yeah.
I filed all the ones you needed, so you're in
So
compliance.
it's not consecutive years. It's based on
May not be,
compliance.
right, exactly.
It's good information to know.
So in all this non-filer, what if the IRS has made up a substitute for return, an SFR, in one of those 4, 5, 6 years? That's an interesting conversation to decide what to do, because do I replace the SFR? Do I actually like that number in this particular case more than what would actually be done? And because an SFR starts the 10-year statute of collections, there's times where you just don't touch it.
And what does that stand for?
Substitute for returns. When the IRS makes up a return for you.
Oh, yeah.
Now, for businesses, you can't stand an SFR because it's based on a 1099. You get no
Right.
deductions. You're like,
Right.
I'm definitely replacing that.
Yes.
But even then, I definitely don't sometimes if it's 5, 6 years old, because wait a minute, if I redo it, they're still going to run out the time. And I look at the 10-year statute of collections. This is where charging for transcripts is a great way to start your practice, because they need to know how much time they have left on that 10-year statute to decide replacing or not, because this 10-year statute never starts if it hasn't been filed. It does start with an SFR, a substitute for return. And there's something I learned recently, and you may have known this, you can't bankrupt. Like, you can bankrupt 1040 taxes. You can't bankrupt an SFR.
Really?
I found that
Correct, yes.
shocking to me, and it caught me off guard on a case. And if you can't replace it and make it bankruptable. So not filing
Right.
can really hurt you
In many, many more ways.
in
And
so
some
many ways, right?
District areas, like I happen to have a state that is one of those, that if you ever have even a late filed return, it cannot be included in
That is not
the
fair.
bankruptcy as well.
I'm telling you.
So there are
Wait
a
a
lot
minute,
of
no way.
penalties other than just the monetary penalties for a taxpayer that's not filing. So that's one of the ways that we can help. We're always, as practitioners, we're educating, we're helping our clients. We're like, well, let's just show you a different way to do this better. Look how much you would save in those penalties and interest if we just did it this way. We're monitoring. And there's so many areas of our practice that we certainly is revenue generating, but I think we're giving the clients so much of a better experience by helping them in that way.
It's funny that you mentioned SFRs. I actually had a client, I put their transcript, and they had going back like 10 years. I was like, do I file those
depends,
back years
right?
or
Yeah.
not? But now I have some more
The
information
expiration
to
date
make a better
factors
decision.
in and
Yeah.
everything, yeah.
So you were mentioning penalties. Let's move on to penalty abatement.
I'll let you take it
Shaking our head
first.
like-
You and I agree on this.
penalty abatement.
It's not that I don't like penalty abatement. I just think it's a myth that the reality being, you've already hit on, first time has now been made harder. And I think one of the reasons it's being made harder because, this is a guess, no one's officially said this, but because there's less training with ACS, they're reluctant to give first time abatement and maybe get in trouble for giving it. So it's easier to say, you know what, just file that 843 form and do it in writing. And now my concern with penalty abatement is how much time you as the representative are spending on it for what you're going to get paid. Like a $3,000 penalty, it's hardly enough time and to charge them to make it worth it.
Right.
But a $50,000 penalty, wait a minute, it's worth taking a shot even if you lose.
Right.
So that, and I think this whole reasonable cause thing is so nebulous. Like, what is the rules around reasonable cause?
Right.
So I've done a bunch of them, and I can never, like, there's somebody I got a penalty abatement for I never should have won. Like, how did that happen? And then 4 or 5 that should have been easy, reasonable cause, and they said no, and I went, all right, I'm done. I'm like, I don't know. I mean,
And it's
thoughts?
unfortunately because so much of that is driven by computer. That reasonable cause
it is.
assistant, I think when they programmed that, I don't know how long ago it was, but they thought, well, it's too subjective because some agents are giving abatements where they shouldn't and other ones aren't. So they programmed it into a computer system, but the trouble is that that really can't understand those unique facts and circumstances of our clients.
Right.
So that's really the wall we're running up against for reasonable cause, but then they have made it more difficult for those first time abatements. Absolutely.
I had a big win last year with a penalty abatement. I was
Oh,
telling
how
Vaughan
nice.
about it, where we had a client. He was in compliance. He filed. He just wasn't paying, and so he would always accumulate 3 years and pay it in one lump sum. So he had this large penalty abatement, like $300,000. So I was working with his tax attorney to get it abated, and I was telling Vaughan that it was a cash flow reasonable cause, which he says hardly ever gets abated.
I can't win those, so you're ahead of the game.
Oh, that's awesome.
Hey, but you're a hero, right? When you get rid of that kind of penalty.
Yes.
Right.
Yeah, and it was always based on, like you said, the narrative, based on their facts
Yeah.
and circumstances. So being able to tell the story based on the client and where they are in life, that really helped.
And that's one of the weirdest areas of practice that actually falls into it is
100%.
becoming a storyteller. Where do we do that anywhere else and say, well, you know, some things and that is part of our job is to help them to understand our client, that maybe they're not a can't pay or won't pay. That's 2 areas that they focus on. Oh, well, they're a bad player. They're refusing to pay. Well, no, let me tell you about them. Here's what happened. Maybe the client's father passed away and here's what he's trying to deal with. That's a different scenario than maybe how they just assume that the picture is.
So
When
true.
we provide the resources with this session, are there links we can provide to people for sample letters for penalty abatement? Or letters that work?
They
Maybe
exist,
able to, yeah.
right? I've been in some classes where people
Right.
have shared them, but I was in one 2-hour class and they shared a 7-page sample letter that the IRS will never read. So it's
Right.
it's like you're just trying to overcome them. Like they just get,
Right.
I'm
With
tired of reading
words.
this. I'll just say yes. So, but to your point, how long was your narrative?
I had to do it for 4 years, and they were like a page and a half each year.
And so that's a sweet spot, right?
Yeah.
Like it's enough
Yeah.
information without too much. I think that's kind of what you're going for, and it's just telling a story. But medical, like if you had a medical issue, I almost used to say like, all right, if you had documented medical issues, I got the hospital bill or whatever, almost always. Now I'm wondering if that would still work in today's penalty abatement as they're changing the rules with so much
Right.
inexperienced people. So I talk so much now these days of pre-COVID rules, this is for anything, and post-COVID. The rules of representation are very different post-COVID. And they're just going to take many years. They're hiring a lot of people, they train them, they either leave, or if they're any good, they move into another department. So we're going to be constantly training new people in this world for the next, I was thinking 5 to 10 years before you see some settling of what the new world of representation. It's going to be a lot of work.
So the IRS has a pipeline issue too. Sounds
Yeah.
like.
I think so.
And it feels so much like we're on the front lines of a lot of that training as well, because maybe, and that's where we should be comfortable with. If it's like, I know this is the rule, and we can approach it, professionally.
Right.
Usually my style is, I'm pretty sure I can do this for this client, and it's not, to speak
Right.
to them in a demeaning manner. It's, I think this is how we should approach it. So we are on that front lines, but to have that courage to go and say, this is really how we need to solve this, and it's because there's so many new agents and that they get moved up very quickly, and it's a tough job. it's got a really high turnover rate as well, unfortunately.
I'm gonna feed one to you from our earlier conversation here because we were talking about when to go to appeals. Where pre-COVID, I didn't have to go to appeals. These were experienced revenue officers, experienced ACS, and I wanted to deal with someone who'd been working for 20 years and knew their stuff because in a 6 or 7 figure case, that's what you want. You can get to an agreement. They're not worried about the manager approval. They know they can get it. Now that these new people, make your point on appeals because I think it's very different.
And we have different areas of the country. We have little pockets of really, really well-trained personnel and some that aren't. And I have an area where I know going into any audit it's just at that level that we're not going to have much success. And so I'm already preparing the client ahead of time, telling them, just so you know, this is probably what I expect, and we're going to need to take it to appeals because at that level, they don't have the training. I mean, I'm sharing with you that I was explaining to the auditor the difference between debits and credits, and that he should subtract and not add this particular item. So it is that we have to kind of work with that and understand that we have to start at that level and work through the system, but that I'm finding I have to do a lot more with appeal work than I used to in the past. Just maybe it's a lack of training, maybe it's that's just where we're at in the world, and we have to prepare our clients and say, this is also going to be more fees and it's going to be more effort, but here's the expectation.
And since we're headed in that direction, would that require a higher skill set dealing with appeals versus doing the installment agreements or the non-filer returns?
So in those two specific areas where you'll go to appeals would be, like say, an audit that you don't agree to. So that would be probably a little more out of, if you said like the baby steps, and we're saying here's some really good places. Audits are a little more robust. Some areas of collection that we're like, yeah, we don't agree with that decision. Offers and compromise, there's an appeal route there. So it may be like the next level, but it's that you are dealing with personnel that are usually a lot more seasoned. In the IRS, they usually are the ones with the accounting degrees and the years of experience. So they're who we want to work with anyway. And they're a great bunch of folks to work with. Sometimes frontline ones, we just have to be like, we do our best and see where it goes from there, unfortunately.
I got into a weird little part of my practice I didn't expect to do, which is partnering with an EA, I'm an enrolled agent, an EA, or a CPA who may not be comfortable in an audit situation, don't really like even the negotiational aspect of collections or audit. So I joined them on a POA. I essentially the project manager. I talk to the auditor for them, and then that CPA or EA can just answer the specific questions about the return they want to deal with. They don't need to deal with the rest and thinking through the process part. And so it saves some money on my fees, but we just get those questions and they do that. So where I was ultimately going with that is I see a lot in appeals where I think from an audit perspective, if you know your return, you can handle the appeal. You may not like the aspects of getting it all straight, but what are your questions? Oh, boom, 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 boom. I did the return, right? Now in collections, the challenge with appeals, where I think it's more challenging for some representatives, is most appeal officers are former revenue agents, auditors. They're not former revenue officers. So they don't really understand what they're looking for. So they go internally back to other revenue officers and, well, you just appealed a revenue officer's work. So you're getting advice from another revenue officer when we didn't agree with the first revenue officer, but hopefully they're better. I don't know. So the appeal of collections can be a challenge. On the other hand, it leads into offers and compromise, because these days I think you have to plan to appeal almost every offer and compromise.
Yep.
So the form says you can do either 12 or 24 months calculation on income versus the allowable expenses. But what an offer specialist does, the frontline person, is they take that number you propose over 12 months or 24, and they run it to the end of the collection statute. And then they go, oh, you can't do an offer because you could pay, they're assuming you'll make that same payment forever, which is not true, and to deny it. So you have to appeal it to get somebody else who says, no, they can't do that. So I've had a lot of success lately with appeals and offers because the offer was right, we did it correctly, the math is right. They just pulled something out of a hat and said no, and I went, wait a minute, all right, just give me the denial, I'll appeal it and go. So
that's a great tip. If your offer is denied, appeal it.
100%. I think you almost have no choice these days.
And it's also feeling comfortable that you should be submitting that offer to begin with, because it comes with a whole host of side effects. Like you're going to be adding to the statutes, so you're going to be possibly harming them more when there could be an alternative way to go about it. So we were discussing earlier is what do we tell the clients, and they always come in the door and like, oh, I want
Yes,
an
that's the
offer and
first thing they
compromise.
ask for.
That's probably how we do this, right?
You know, despite what the television and radio ads tell you, I'm going to tell you that probably 1 in, let's say about 30 or 35 truly qualify, and I do not submit them that I don't believe qualify. So it's saying, you know, there are other ways to solve this. I can help you solve this, but that may not be the best way for you.
And there are softwares out there that if you put all the data in, will look at the situation and help you make a decision. Am I looking at an installment agreement? Am I looking at, we didn't talk about this, but that's part of installment agreement, currently non-collectible. Maybe they qualify for an offer based on that data, and that software help can certainly kind of guide you in that decision.
And do you use that tool in your office, or did you create one for yourself?
Yeah, we made something internally, but we're always looking for that as well. So.
Absolutely.
We are going to take one more quick break for another word from our sponsor, and then we'll be back with the third CPE code for this session.
Prior to using Canopy, we had multiple different pieces of software that we've actually evolved through. Canopy better serves our needs, has more efficiencies, it's a better cost savings when we take it in aggregate to all of our other tools.
With Canopy, everything is in one spot. So previously we were using one software for client management and project management task tracking, and we had a whole separate secure portal for all of our document storage. And it wasn't until Canopy was kind of put in front of our face that we realized it didn't have to be that difficult. We didn't have to have separate logins for the team, separate logins for the client. It's so seamless. It's very easy to look at everyone's tasks and understand what they have on their plate. The customer piece truly is huge. That's what has made such a difference. And as clients have been uploading documents for tax season, everybody's on the same page. We get the instant notifications. It's easy for the clients to do. 100%, we are so happy we are with Canopy. We would not go back to the software we were using before, even if they gave it to us for free. The biggest money saver that we've had since Canopy is that we were paying for 2 separate software, and really for the price of one, we're getting everything within Canopy.
Ultimately, switching to Canopy, I hate to say this, it almost didn't matter what Canopy cost because of the sheer volume of time that it saves us. Whatever you bill an hour, I don't bill an hour, we do fixed fees, but whatever your equivalent hourly rate is, I promise you the software is less expensive than that. Go land one client, it's paid for. So it really is a solution about value and not about cost. It just so happens that the cost was less than what I was previously paying, so hooray, I win both ways. The question is does it make us better? And Canopy made us better.
Welcome back. And if you look at the bottom of your screen, you will see the third and final CPE code for this session.
That was a double hit.
He didn't. He was worried. He thought the
Vaughan
googly
wanted to
eyes would
do
stare
it.
him
The
down if he
googly
did
eye
it
she's
wrong.
got on this belt scared me to death. I was leaving it to you.
Got nervous.
Be sure to write down that code if you're planning on claiming CPE and or
funny.
CE credit for this session. All right, where are we finishing up in offers and compromise?
I want to say that I have not done one offer and compromise in my office because everyone automatically wants that, but then I say the IRS wants you to be pretty much desolate. You probably don't qualify.
And that, for those that it is appropriate for and that truly qualify, it may be the route that you need to go. But like we were saying, it's maybe 1 out of every 35, 1 out of every 40 where that is truly the case. But we need to be prepared to say, here's all the alternatives that may be better, as we need to tailor it for each client specifically to not set them up for failure, but that one isn't exactly a well-used approach for solving their issue.
I feel like I'm going to crush all the dreams of tax practitioners with
Right.
this, but if you're doing more offers than installment agreements, you've got it all wrong. I talk more people out of doing offers because of the specific facts of their case, and I do some consulting with other practitioners who pay me to come in and look at things because they want to make sure it's nice to have a mentor. And like, why didn't this offer work? Almost all the time, they didn't look at the assets. If you've got a house with 50 grand of equity and you owe 30 grand, you'll never get an offer. It's just the basic math of that. So here's a quick way. When clients come to you and like, I want to talk about doing an offer, which you can lose easily, a couple hours of this kind of your life and never get paid for it. And don't even get into income versus expenses and collection standards. Assets. How much equity you have in your house? Oh, I don't know exactly. Give me a ballpark. 60 grand, 10 grand, whatever. Give me a ballpark. How much do you have in any investment accounts?
Yes.
What kind of cash do you have? What's your cars like? Those 4 areas, if those assets, because if you look at an offer form, it discounts some of those a little bit, but don't worry about that yet. If those assets add together and they're more than they owe or close to what they owe, you just saved yourself a whole bunch of wasted time you're not going to get paid for. You can explain to the client you're not going to win, here's why, but I've got a great installment agreement suggestion for you that is this fee that I can help you with.
Right.
And you got to be current. And I think the biggest thing with offer, if you win, you have to stay clean for 5 years. You can't owe them again.
Oh, wow.
You can't file late again. And all these people got into this problem because they didn't file on time. So I don't like doing any offers unless they file at least 1 year, the most recent year, on time and full pay it. Because I'm trying to prove to the IRS they're not going to get in trouble again. And prove to myself that it's worth, because I charge more for offers. So I hate to start with the most expensive option that has the least amount of chance on average than an installment agreement or a currently non-collectible. And last thing on this, if somebody is unemployed, they think it's a great time to do an offer, is a terrible time because you have no income.
Right.
IRS looks at it that way.
You'll likely default.
Who's a great candidate? Someone on Social Security. But then get them uncollectible, because we were talking about this offer is just a way to extend this collection statute and give the IRS free information on your client for no reason. Because you extend the collection statute from 10 years, what, 2 to 3 years on average?
Yeah, 6 months plus however long it's pending, and right now there's so much time frame that they're pending that you're adding
Exactly.
years to that.
So you're extending the collection statute, you're giving them information, they're going to say no. Do they have the assets? So I forget it. It's valuable, but in very specific situations. But the last thing I knew we wanted to cover was questions on ERC.
Yes.
Right.
Hot topic.
Yep.
And that one
That
is,
could be an hour itself.
I know, right?
I know. This whole session
That one's
could
a
have
tough
gone
one
on
just
for-
because
Oh, comfort.
so many of our clients are coming to us and like, well, I paid for this company that says I can get this credit, and maybe it's a client you're doing payroll or accounting for, and the good ones will come to you first. And I had that occasion of one saying, well, they said I qualify, and it's like, well, let's look at the rules, and here's why we said you're not qualifying. They're like, oh, I'm so glad you told me. But unfortunately, there's a lot of, I guess, ERC mills we can call them now.
promoters and
They're out there advertising.
They're owned by the
and-
offer mills. Offer and
Yes.
compromises, right?
Unfortunately.
It wouldn't be a shocker,
Probably.
right?
But as far as what they're looking at doing is it's presenting risk for our clients, most definitely know.
This is probably a good teaser for a podcast for us to do, right?
Right.
Because we could spend an hour on where ERC could go. So here's the really short answer is the IRS doesn't know yet. So what it feels like they're doing is scaring everybody to death and get you to work for them to give the money back, and a lot of people probably shouldn't take it in the first place.
Right.
But the rules on whether you amend the returns or not, how are you going to get them an installment agreement if they've already spent the money and they shouldn't have gotten it, IRS isn't sure yet. And we're coming up on the first amendment deadline for any 2020 business returns, which would be what, April 15th,
15th, yes.
2024?
Upcoming year.
So do you amend returns for people you said not to do ERC? I just got a call before the class this morning from a client who said OPR, Office of Professional Responsibility, has come out, and I haven't verified this yet, but it sounds right. OPR said if you amend a return and it was incorrectly, the money was taken incorrectly through ERC, you're potentially actionable against that tax professional. So just scare us all to death.
Yes.
So there's a lot we need
There's
to
a
get
lot
into.
to ERC
So there's that
going
monthly
right now.
podcast opportunity. We can keep evolving
going,
this
right?
monthly because you're going to have to.
Yeah.
I think it's going to be like PPP. PPP came in with 150 grand you automatically got forgiven.
Right.
There's no way with the resource constraints we've talked about this whole hour that the IRS can nail everybody on ERC. They're going to aim for the big dollars. They're going to be doing these things to try to get you to pay back. Our best guess with hardly information is it seems like that's where it's going. But I bet the story will change next month. Every month the IRS gives out new information, so it'll just need to be evolving.
Right, and we know the trending is going to be a lot more exams and audits, and definitely focusing on those who took the ERC and say, oh, well, even if it's in the background and the client never knows they're being audited in that sense, if it looks like on the surface that it's legitimate or not, I'm absolutely certain that's going to be an area of focus for them.
That's a great point. It'll start with the audit. ERC has to be audited first,
Yep.
and then it's got to move to the collection part.
Exactly.
And because these are businesses, those are the challenging ones because you're dealing with revenue officers more than likely, more difficult forms. Is this trust fund or not because you got payroll taxes involved?
Right.
That's like college level representation. We're starting, I mean, it's just, there's a lot of questions
Going to
for
get
this.
messy.
So what does it look like in the tax resolution landscape for those clients that will or are likely to get audited? How do we help them?
ERC is the gift that keeps on giving to your representation practice. I think we got, 2 or 3 years till we can try to teach people how to handle representation to prep for this, because ERC is going to be.
It's going to be around for a while. It's not
Absolutely.
anything that's going to go away anytime soon, for sure.
And we got to wait out the lawsuits, because there's too much money
Yes.
involved for taxpayers to say, I'm not agreeing to that audit, so they'll go to tax court, which will probably get outside of the window of opportunity to amend return. So many questions.
It really is for that one.
So in our final couple minutes, if you want to get into tax resolution, if you're a tax practitioner and you want to add that to your practice, how do you start?
I would say that I am definitely that audience you're speaking to, because before I dabbled in it, and then we really started taking a hard line to do more tax resolution work. So for me, we started with installment agreements. Clients couldn't pay,
Perfect.
so we would set up an installment agreement for them, a full pay installment agreement, because these are usually current years or maybe 2 or 3 years in back taxes. So I would say start there. Find that lane where you can do installment agreements and you do them successfully, and then start tacking on more of that more advanced tax resolution work.
And to not be afraid to add in more and more to your knowledge. Is a wealth of information that's kind of where I started out years and years, I won't say how many decades ago, but a while ago, and I was so afraid of giving bad advice that I was just absorbing everything I possibly could, and there's a wealth of information on resolution as well, but just like tax law, it does change all the time, so be willing to continue to put time investment into the knowledge.
You start easy. It's like any practice, right? You get one client, maybe I'll get 2 the next year and so on, but it grows. There's a lot of representation work out there, and looking back, most of our processes are internal. I would recommend, if you're going to start doing this and start at the beginning, you do want to use a software to help you organize your clients. Because if 2 revenue officers call one day with different cases and you got to call ACS and trying to keep your timelines and deadlines straight, it's really easy at the beginning, but when it grows, it's hard to go back and put that process and software in. Start from day one and use that to help you planning for the future. You won't need it at the beginning, but you'll thank the Lord I had that by year 5. So just a thought.
Exactly.
And if you find someone that's willing to mentor you, definitely take advantage of that.
I think that's the opportunity is, I've seen some of the training groups out there in resolution, but I think the mentorship part, I've been through a training, now I got a case, I want to share it with someone, and I think you and I both have done that with people before where,
With me accountants.
hey, let's take a look at this. Oh, what did the ACS say? What did that revenue officer say? Okay, here are some things you need to look into and be careful about, and then, I feel better. I can go back and deal with that case.
Exactly.
So.
All right, well, thank you so much for a fantastic session. As we have pointed out before, we will be publishing the archived videos of these sessions on our website within, we think, about 2 weeks. And at the same time, with each video, we'll include a resources page where we can send you, provide you with links where you can get more information on the topics we're discussing. We have 1 session left in our 14-hour marathon, so don't go away. We'll be back at the top of the hour to talk about changing your tax practice from irrelevant to irreplaceable. Thank you, everyone.